try and keep it fun and interesting, and we have a fantastic panel here. I'll let them introduce themselves in a moment before I introduce the panel for today and myself quite a bit. So we're going to talk about big data in FinTech. It's again a very interesting topic coming after the sessions we had earlier, because the companies we are representing here on this panel today have done some fantastic work with big data. You'll see that Jacqueline has worked with a lot of big data in a bank, and now she works for a startup doing very interesting stuff. We have number 26, which has done some fantastic things for the German market and looking at several new markets for entry, I believe. And we have Savedo, which has been one of the trendsetters in terms of their product and in terms of using big data in FinTech. So I'm keen to understand more about the perspectives on big data from all of you. To introduce myself quickly, I run Burnmark, which is a very new research company focused purely on FinTech. It's a venture started in partnership with FinLeap, based in Berlin, so that's my Berlin connection. And I'm based in London. I work with several banks, with FinTech firms and investors, helping them understand how to partner within the ecosystem. So that's what I do primarily. I also do a lot of other things like speaking and writing and blogging, but that's separate. So I'll let you introduce yourself. Jacqueline, would you like to start and give us a brief overview?
Okay, so I joined VendorMach just about a month ago. It's a company that is working on a credit scoring methodology using artificial intelligence, and it's for small and medium enterprise for the supply chain. My background is, my original training was in physics. I'm a theoretical physicist, and then I went to banking like most physicists do because I couldn't find a permanent academic job. Then in banking, I was in risk management. I was a quant, so that's where I worked with a lot of big data, mostly data from rating agencies, from Moody's, on rating migrations, and also I used some third-party software for calculating risk.
Okay, thank you. Christian.
Hello, I'm Christian. I'm CTO of N26. I have a background of product development over quite a long time, actually 17 years. Worked in different companies and industries before. Actually, it's the first time being in the finance space since now beginning of last year. I think it's one of the most exciting spaces to be in currently, as there is so many opportunities actually to leverage also data, but also to create a much better customer experience. So it's a very exciting field, and I'm learning really every day a lot, and I'm sure I also will do it this panel.
Thank you. Steffen?
Yeah, hello, my name is Steffen. And I was yesterday on the dinner, and I said I'm in FinTech, and I met a majority of people that didn't know what FinTech actually is. And I have to admit, I didn't know it either. So it's financial technology, and I'm, like you, probably from a completely different world. I studied business, but I also studied computer science, and I did my PhD in machine learning and pattern recognition. And then like you also, I went through different fields. So first I was in radiology and did analysis of brain images, which was pretty cool. But similarly, I didn't stay in academia. And then I went to advertising, and I did real-time bidding stuff and those kind of things. I was also a consultant and shaping the big data practice for one of the big strategy consulting companies, BCG. And and then I left and joined Hitfox, and here now I built my second venture. The first one was in EdTech, and this one is now in FinTech, and I think it's really cool. I met a lot of people that think it's really good that a technical guy can build his own company and do something with data in different areas, and that's what I would like to bring across and encourage everyone that is playing with that thought and share experiences if they're interesting.
Absolutely. So to kind of structure a conversation today, I mean, if you look at the data aspect of FinTech, there are three main innovation areas that we see. So one is, the first thing that's happening is collecting new data points. So we are actually discovering completely new data points like social media data, for example, that banks never looked at, banks never used it really, or no one really used it to do credit analysis or understanding your customer. And now we are looking at completely new data points. We're collecting and bringing together all those kind of data points together. So that's happening on one side. And the second thing is, of course, what you guys are all doing in terms of analyzing that data that's already in there. And you have the silos that you're bringing together and saying, there's a fantastic collection of data now. How do we use it to make sense of the customer so that we can create that better customer experience? So what is your view on how we can bring all this together and analyze the data based on your experience? Jacqueline, you've worked in a bank before you started working for your company right now. And I'm keen to understand, how did banks think about this problem in terms of understanding the credit of the customer, managing the risk, the regulatory side? How did you go about doing this?
In the last job that I had, we did actually use a lot of data to calculate some capital charges, and the regulator was monitoring these very carefully. So there was a lot of scrutiny by the regulator, because they don't like, especially third-party, not so much data. Data's not too bad, even though you constantly have to justify that the data set you're using actually applies to the business of what you're looking at. But they really didn't like external software, because they inevitably have this black box aspect, and the regulator wants the bank to understand actually what they're using. So there was a penalty, actually, that was imposed, because we were using a software that we couldn't really delve much into. And I personally worked on a project which lasted about a year, which was basically speaking to people in this company for many, many times, and trying to get as much information as I can from them without them actually giving away what's in their model. So it's very expensive for the banks to do that. But on the other hand, in this particular case, the software was so complicated that the bank had to hire maybe 50 people working on it for 2 full years. So it was better to pay this penalty and to pay an analyst a huge amount of money to try and understand the model. Cheaper for them.
It's almost ironic that you're spending so much effort to hide the kind of innovation you're trying to do in the market. But is the banking world changing, you think, Christian? You have grown really fast in the market.
So if you look back into how banking was, and in retail banking, you go to a bank branch, and maybe the person knows you a little bit, and maybe you go there once or twice a year, so he maybe knows that you're family, he has a few K data around it, but yet it's really individual-based knowledge on the person who's actually in the bank, so that's personal relation, and it's not many data points, actually. If you look now into our business at the end of the day, being a mobile-first bank, we have of every customer more than 1 billion data points. And it's now, thanks to technology, we can process that and make meaning out of that. And for that, offer hopefully also better products or better services to the customer. So we think there is a massive change actually going on what is possible in the future in financial services.
And Steffen, one thing that's very interesting is you were one of the early players in Germany, if I remember right, and you've been in existence for a few years now. So how have you seen that evolution in FinTech? Because you created a marketplace very early on, and how has the use of data changed from then to now?
Yeah, I think, and probably everybody can feel like that when you entered probably big data, then first the people were like, dude, what is that about, and why would you need that ever? While you were pretty sure that it makes some sense, and then the people in the next level, they kind of get what it's about, or they read an article, and then they believe you can fly to Mars with it, and they're totally overexcited, and just after some time, they arrive at reality, so like what is possible and what not, or what should you do and what not, and I think if you are someone that is already at that point and then you go into a new industry, you have a very good chance not to over-engineer because you're on some hype cycle and try to build a spaceship, but also to be better than everyone else that doesn't use that technology at all. And I wouldn't describe my company as a big data company, but from the first day it was kind of data-driven, and like thinking of how to model data or how to translate reality or business question into data-related questions that I can answer with facts instead of with gut feeling from a 50-year-old banker, because we don't have that person in our company. That was what brings an advantage, and I think it's similar here. If you ask a bank, and they have a full banking license now, if you ask them how many bankers do you really have in the company, it's very little, I suppose, and that's not a bad thing actually. And so that's what I see is changing a lot. Like banking is not done by bankers anymore. Similar to medicine, if you go to university and you look who's doing brain images, it's not medical doctors, it's physics students, PhD students, mathematicians, computer scientists. That's the guys you'll find, and we will see that kick in here. So I think it's a really good opportunity for everyone that comes from that field.
But what would you tell people who are entering the market now in terms of the challenger banks, in terms of the marketplaces? So what would you give them as advice in terms of handling the data? Because again, we are using AI, machine learning quite a lot in everything that's coming up. I mean, is that a good thing, or?
I mean, I would rather say the most dangerous thing almost independently of your position, but especially for someone who wants to create a business or is strongly shaping a business is your own personal weakness, which is often associated to being in love or passionate about something that to others and to maybe to the majority doesn't make sense. So that means, I mean, there's also this expression like kill your darling or something like that. So it means, yeah, like sometimes listen to the others, and if you want to really build this awesome 1 million data point analytics algorithm just to see if they write like red or blue buttons in the mobile app better, maybe don't do it, because the monetary value is so little that it doesn't compare to the effort. And that is a weakness that people typically have when they come from data science itself. They're like this engineering playing kind of people, and from the other side, you have different weaknesses, like not believing or not being interested in complexity, like not asking the complexity question, like what is the cost of answering this question? Like a marketing division typically asks for one report after another without asking what that means. They just like it. So that's my assessment, I think.
I think you raised an important question that I want to ask Christian about the customer monetization, right? So you have all this data now of the customers. You have about 300,000 customers or slightly less than that. And if you have all that data, which is extremely valuable in the market, have you thought about monetizing it? Is it something that you would like to do? Or?
So we think that our customer is the customer, which means we create products for the customer, and that's also the only intent of the data we are using. So there are several use cases for us for data. The simplest one would be about just categorizing the transactions meaningful. So if I would send a person-to-person transaction, we call this also money beam, then we would try to make with natural language processing, we're trying to identify what kind of category that is. And then we have the statistics out of that. But then once you have statistics, the next problem comes because, for example, in the online world, people like to order things online, but actually, for example, they would order fashion for 1,000 euro. I don't do that, but they will do that, and send actually a lot back. Yeah, so if you do statistics, for example, in income and outgoing money, then you say, oh, actually you spent 1,000 euro in fashion and then he earned 950 euro with fashion. That doesn't make so much sense. So now you have another problem you need to solve. You know, to try actually to identify and match those transactions and make out of that one transaction, which says 50 euro in fashion. And I think this is some of the basic stuff we are doing with actually trying to make meaning out of data. And that's also our vision moving forward. We want to create, we could like to call this always smarter banking, because we are a mobile-first bank, which means the interface is really limited. Yeah, the interaction you have with the customer is really valuable, and we need to be asked to the spot what he actually wants to see when he wants it, you know. And for this trying to find out what is the right thing he is actually interested in now is what means also for us data processing. Yeah? Give you an example on one of the problems what we are working on, and what is actually one of what is interesting for us. Yeah, it's all banks in the whole world give you a view about the past. They show you transaction history. So obviously they do it on paper. They do it maybe online. And they're trying now to make a personal finance management solution, giving you super statistics about your bank account. But actually, the customers feel quite overburdened by that. Now you need to do budgeting. Nobody wants to do budgeting. Okay, there are a few people who want to do that, but not normal people want to do the budgeting, trust me. But what you actually want to do is you want to make better decisions in the future about the transactions which are coming. And now comes the interesting point. Because how can you make better decisions in the future? And what we believe, this is much more interesting, is actually to show, for example, a customer his future transactions. Because if you talk to people, and I mentioned the thing with the person going to the bank branch, he had a smart person next on the opposite, the 50-year-old banker, which was helping him, and he could tell him a lot. By the way, you have your salary, you receive that every month, then you pay actually your rent, you do pay for Spotify, you do pay for your insurance, you do pay a lot. So he can tell you. Why don't every bank can tell you? And by that, actually tell when you have no money anymore, or that actually you will spend too much money on that aspect. And that's, for example, where prediction comes in, and that's quite a hard field, actually, prediction. You have been in real-time advertisement. That's really hard, but yet you can make it concrete and realistic, and try to make some small steps and make meaning for that. And that's why we think also the future isn't actually leveraging the data for the customer. It's not about selling that to somebody else, but there's so much actually creating value.
That's very interesting. And the traditional banks probably want to do the same thing in terms of having that personalized experience. But they can't because of several factors. And people who have worked with the banks probably know they have so much restrictions on what they can do with customer data. So do you think, Jacqueline, that a good model probably is partnering with each other, the banks and fintechs, to share the data they have, work together on the kind of algorithms and the personalization tactics really for the market? Do you think it can work?
I think it can work. I think banks, still some of the more traditional banks, like the one I was working for, probably still quite reluctant, because they really want to keep as much as possible in-house, just to avoid these problems with the regulator and also some internal politics and so on. But I think it's definitely the way to go. I mean, some will be there first before, and then the others will have to follow, because they'll lose out otherwise.
And how do you think an ideal sharing platform looks like?
I mean, it's one thing that in terms of getting sort of around the privacy issues and so on. One thing that the banks themselves do is there are certain markets where the traded instruments are not, they don't really have a price in the market. So basically every bank values these things on their own. And then there's a service where you contribute what you found as a price, and so then they pool all these contributions, completely anonymous. And then they calculate some averages and standard deviations and so on. And then they'll tell you as a contributor that you are sort of around the same ballpark as the other banks, or you're way off, in which case your model's not really good. So point is, you contribute something, and by doing that, you get something in return. So maybe there's a way for a customer to sort of contribute their information, and then they get a preferential sort of rate or something like that, in return. I mean, that would be a way.
Was it more like big data, or were the data elements not that huge in terms of the available quantity?
You mean for this service, this service in the bank?
Yeah.
There was a lot of data going into these calculations, but I mean, the data was in the market, but the actual final price wasn't. It wasn't something that was actively traded. So,
very interesting.
Yeah, so they do this kind of sort of contributor-based service. There's a company that does that. Okay. It's very widely used. Big banks use it.
And Steffen, have you seen any interesting examples in the big data and fintech world that we could all emulate?
Yeah, I mean, you were just asking, was the data large in terms of size or something? I think it's always helpful to remember what can fall under big data. So it can also be about velocity, or it can also be about very complex data, or very ugly data in terms of missing pieces. And with that in mind, it's really easy. It's like a green garden full of fruits, and you just need to pick them. It's really easy problems for many applications. It's data quality in banks is terrible. The correction of forms or wrong data is manual work, super expensive. So in all these areas with some semi-smart solutions, they don't even need to be like super advanced. You can leverage a lot of potential and create really good solutions. And I think that is what I also see. I mean, and around that, whole businesses evolve. And plus, this is fueled by other trends, like number 26 wouldn't be possible like 10 years ago because it's mobile that enables it, or network or lifestyle. Like a PayPal wouldn't exist because you don't want to send money to America or transfer-wise, you don't transfer money there because you don't know anyone. But with our current lifestyle, this is suddenly a use case because everybody studies abroad, and so there's a critical mass of people. And so I think that is what I see. And in these new sections, there's a lot of technology, and even if people here are in the big data field, but they're not data scientists, but for example, more on the engineering side or the intersection of business and data. What I see also I see a lot of business guys that suddenly become interested in it because it has some fascination. I think that is what I see, because there's a huge gap between the tech people. They sit in different cities, even in banks or different countries, and the business units. And there's almost no link. If you want to be that link, there's a huge market of jobs. I mean, unlimited almost. It's really hard to find actually people that can do both. So that's what I see. And so I think FinTech is just being disrupted by data-driven approaches and data solutions. And
it's the timing, isn't it? It's that the FinTech revolution has happened that at the right time, probably post-economic crisis, the post-lifestyle issue, the smartphone penetration being so high. So it's very highly dependent on the last few years and how it's developed, isn't it?
Yeah, and also I think it's boring. So FinTech is boring and by itself. I mean, sorry, but I mean, it's, and so you have this untouched ground, because if people are doing something fancy, they do it first in whatever virtual reality or in some whatever NASA program, I don't know what, and that's what they're excited about. Or computer games are pretty strong. Like an AI of a computer game was always much better than a consulting program for my next credit at the Sparkasse. That's just they're like 20 years behind at least from a simple computer game. And
I love that example. It's great, yeah, it's so true.
It's really true, right? Like,
it's totally true.
Yeah. So that's
so interesting, actually. That I think gaming, for example, is so much more advanced actually in that space than finance. But also that means there's so much opportunity in finance, I think, to grow and to get better.
And I have to say, it's boring, the material itself, but if you're creating an online shop, you're fascinated by the online shop or supply chain thing. It doesn't matter if that shop is going to sell socks or surfboards or whatever it sells. And so the same is true for FinTech. And that's, I think, also slowly kicking in, that working in a FinTech company is not about finances. Actually, you might be in a company in FinTech without a single banker. And that is cool, and you can build really cool stuff. Plus, you're pretty much the hero. Like you go there, and with some very simple tricks, you can create an awe. And
so I actually know a bank who has acquired a gaming company. So they acquired a gaming company purely to see how the players interact with the characters in the game. Yeah. And it's a sign of how they'll interact with the tellers, for example, or when they call up the phone on the customer service line. So they're actually using data and analytics from the game to figure out what they should do with customer service. So yeah, you're right. I mean, I think gaming and FinTech are coming together, which is really exciting.
I'm in.
But Christian, have you seen any interesting use cases in big data and FinTech?
Any interesting use cases? I mean, I mentioned the thing with the future timeline to you. I think there are a lot of others. I mean, credit space is definitely one of the most interesting use cases, and most
time
meaningful.
Factor, like real-time approval is a big topic right now.
Use case, yeah. Things are just. I mean, I'm not sure who in this room has ever try to get a credit. Just the process itself is ridiculous, and it's just not logic. Why it's that complicated? And the whole credit scoring, I think, how it's done often is also interestingly, because it's often based on demographics and I think also some wrong data. So I think this is one of the space. Also because specifically in the finance industry, credit obviously is one of the big business parts. I think that's where one of the major use cases there. But I'm looking also forward to, because I think there are many more, if for example also in the insurance space, where I think a lot to do, but also in the payment space. Just fraud detection is one of the really interesting things to prevent fraud and help actually make safer platforms.
This came up in a banking workshop, and they asked a group of fintech people really, what do you think about opening up our data platform and all our data on an open platform so everyone can access it? So where does our core competence lie? If we open up all the data, which is where it's going right now in the banking world, what should we keep to ourselves? And what should be our core competence? So I'm going to be very sneaky and ask you the question so I can go back to them and give them answers.
If all the data's out there, which I don't know if it will be in the end, because there are some companies that build their whole livelihood on keeping the data to themselves. I don't know if they will share that. I mean,
at least they're
it's very
thinking
expensive.
about it, which is
yes,
great.
Yeah, it's very expensive. But I think the data sitting there on its own is not really of much use. You still need experts to be able to understand what it means to see trends, to sort of build models around it, and because data, I mean, there's, for example, I'm a physicist, so there's a huge amount of data coming out of any experiment in CERN. So they do the experiment for a few days, and then they analyze it for the next 10 years. So so actually, the data is, without people to analyze it, is pretty much
So that's what
useless.
the bank should be stronger in
yeah,
terms of analytics. Okay.
Yeah.
What do you think, Christian?
I just want to add it there or no, because I think for us it's so important. And we are trying even. So if you look into traditional banks, they can look at. So for example, a banker called me and offered me actually, hey, we have this great offer here. I've seen that you have actually kids, so you should create a savings account. Yeah. And it scared me a little bit, to be honest, because he was calling me and offering me this. And how do you know, actually? And I think I wasn't feeling comfortable, actually, with disclosing that information. So data is also something, so long as it's personal, which should be treated as that. And I think also it's important that the customer is still empowered and in control over his own data. We are not talking about shared data here, because it's a machine. Sure, this data should be open, but people's data, I think, should not be open. And traditional banks have, for example, they cannot look at other employees in their own systems. So you cannot look the Steffen next to you, who's working next to you, what actually his salary is, maybe. Yeah? But you can look at customers' accounts. And I think it's even wrong. Employees of banks should not be able to access at any point of time, actually, any customer data. Yeah? Because, again, I think it's strict. I don't want that anybody in the bank, without my permission, actually knows my behavior or what I'm doing. And I think this is important to keep in mind. It's okay to process anonymous data which is not related to people, but as soon as it comes related to people, I think we need to be careful. And we specifically, I think this is really important, that we keep the customer in control of his data and keep that in mind always when we are moving forward in this space here with so much data now.
What do you think, Steffen?
I'm surprised just about the world. I mean, I remember when I was a child that my parents were complaining about the question, like when they count the people in the German Republic to find out how many of them are, and then there was a big discussion if it was proper to ask for, I don't know, religion or not, or like some questions that are just so basic, and today everybody's putting, or almost everybody is putting stuff out on Facebook pictures that they most likely will regret in 10 years. And
More like 2
it's
years.
really it's really a change in habit and also a change in perception. So people create a totally different habit in dealing with data, and that doesn't mean that it's good. I just think that we are in a different century. I think once you start to have cars, probably schools start to have education that tells you how to maneuver in traffic, and if you want to drive a car, you maybe make a license. And we're entering an information age, and I think it's crucial that people or also parents teach their children, or teachers teach their students how to deal with data. Like, what is it? What can it do? Like, what is the power of it? Like, if you don't know that a car can kill you, you might just run over the street. But if you have an understanding, you might pay attention. And that's the same lack of awareness of how strong or how strongly something can backfire with data. There's enough lessons in school that would be appropriate. It could be the business classes, it can be mathematics classes. Like in almost any class, you can talk about these topics, and it's super important.
I think there's consensus here that it's not there yet. We have a long way to go in terms of sharing data and data privacy. But before we move on to questions, one last question. So, Steffen, what do you think the future of FinTech would be like going forward? Do you think it's a hype, or do you think we have reached a level of very interesting innovation?
I think I witnessed a similar question in a different panel. I see it, or like, first of all, I said I didn't know what FinTech is. Then you get into it, and then every day it becomes bigger, or it seems to be bigger. You see how much bigger it is than you thought. So I think it's a huge area because also in the panel here, we typically talk about payment or opening a credit or bank account, but that's just private customer banking. But the massive part of banking is interstate money flows, supply chain financing, factoring, where companies buy liabilities of other companies, and that's huge amounts, and that's all subject to risk scoring and all those kind of things. So I think it's a huge playing field, and I think the same will happen as in transportation. Like in the beginning, you have very few means of transportation. Like you have your feet, then you get a horse, and then you invent something like a wagon, and then the next generation is you build a big lorry. That makes a lot of sense. And so I think that's what we see here. The people will build big lorries that deal with big data, like massive amounts of data. And then I think we'll arrive in an age like now where you have unlimited means of transportation, super specialized. You have like the one thing that is like a bicycle, the next thing is like rollerblades, one is more for fun, one is more to be fast and quick, the next is easy to get a parking lot with. And so that's what I see. And that translates to me in a highly fragmented market with strong interdependencies, some bigger players, but also they will lose parts of the value chains to specialized companies like in transportation. Like brakes will be made by a brake manufacturer, or the control unit for some parts is going to be a part that will be bought by a couple of car manufacturers. Right. And that's what I see. I see the same development of that whole thing.
What do you think about the FinTech future?
Future FinTech, I think, is it a hype or not? I think the customer behavior is changing, not talking specifically about the customer trends, and I think there is what we see, or why we also exist, is because customers have different expectations now. Specifically now, they're talking about retail banking. Yeah. I think it's different in other spaces, definitely. But there we are just at the beginning, and you see this because most people still do banking very traditional. So we think that there is, moving forward, there's a huge change still yet to come.
Brilliant. How about you?
I think some of the traditional services the banks offer, especially for like transfer of money from one country to the next, are just incredibly expensive. So, and they're not easy either. It takes longer, and I've seen many bankers actually using online services now to
Interesting.
to transfer their money here and there. I mean, it's not for huge amounts, but so it's. I mean, if there are more people using this from within this traditional establishment, then I think it's...
It's also about transparency, isn't it?
Yes.
You want to know what you're getting into before you actually get the product.
Yes, exactly.
And banks were rubbish at that in the
Yeah.
past. Yeah. Okay. Thank you so much. We'll